So we start with Francesco,
okay.
I suppose.
Yes,
and
maybe I would need the podium.
Yes, and again, the first challenge, the three magic numbers.
The three magic numbers. First of all, good morning, everybody. My name is Francesco Sola, and let me say it's a pleasure for me to be here today and representing my group Generali in this very important event. I will start from a couple of... Thank you. Okay, I will use the first two key numbers to introduce a little bit myself to you. And then at the end of my presentation, I will explain my third one because it's a personal takeaway linked to some of the content of my presentation. So I will need to talk about my presentation and then I will explain the third one. 45 years old is my age, basically. And despite I consider myself still young, in day like this and in event like this, I really realized how much time has passed since the last time I was seated where we are seated now as a student. And this reminds me always that time is moving fast and we need to move fast as well. The second number is about a date. It's my first date at Generali Group. Okay, after several years as a consultant providing financial service industry with the risk management and governance, advisory, I decided to leave my young partnership in one of the so-called Big Four company and to join Generali Group, specifically in the group investment management function, and to help the group in setting a new investment governance model across our operation in the world. This day started for me personally a very amazing journey, very professionally speaking, that completely changed and improved my life, at least in my job, and is still improving because 1 year ago, fortunately, I had the chance to take on the responsibility for the investment stewardship, which in generally means the integration of environmental, social and governance topic into our decision making, but also supervising and steering the voting process as a kind of active ownership for our job. Moving to the next slide. Pardon. I will start my speech simply introduce to you some global overview and numbers about what ESG or /SRI market means today. According to some recent studies, the so-called ESG market accounts for roughly 23 trillion of assets under management, which means approximately 26% of the global asset under management worldwide. As you can see from the chart, Europe is the leading region in terms of ESG SRI markets, providing for approximately 52% of the global asset under management under ESG SRI approach, but not only in terms of asset under management, I would say also in terms of defining the constituents and developing the methodology. Inside Europe, France is the leading country, historically has more experience on integration of ESG into investments, but also it's supported by kind of internal regulation that is evolving quite fast. One key message from this slide is that despite the market seems to be so big and seems to also to be on a trend for growing, what is important to understand is that today there is not a unique approach for integrating ESG into decision-making process. So each player is basically developing its own approach, sometimes collaborating, sometimes by confronting, sometimes working together, but there are no standards, at least today, available on the market, and so we really welcome our regulator to start thinking about this, which probably will help us a lot to reach a kind of standardization and homogeneity. But coming to the question, why companies that are embracing ESG, are particularly interested for institutional investor and asset manager like Generali Group? But basically because those companies perform better and mitigate risk, which is obviously something that investment managers always chase. Some example, some studies show that, for instance, companies that are implementing ESG practices are more competitive on the market by investing more on human capital and innovation. Companies that have received a higher ESG rating, for instance, generate above average return and distribute higher dividends than companies that have ESG rating lower. And the volatility of those returns in the long-term perspective is lower. All these are fantastic KPI for investment managers. Lower risk and volatility. It has been shown that companies that implementing ESG practices, good practices into their organization typically have a stronger risk management and compliance framework, so which means less risk or be able to prevent especially those kind of events that could be disruptive in the business of a company. Last but not least, lower risk exposure to ESG typically leads to a decreased beta for those companies, lower cost of capital, which is important, and as a consequence, higher multiples. These are all good reasons why institutional investor and asset manager are looking at companies that show good practices in implementing ESG as a target for long-term perspective investment. As I explained, despite there is a unique view, a unique approach for integrating ESG methodology, we can sum up, we can group the strategy or the practices for integrating ESG into some homogeneous family, and with a different degree of integration in our decision-making process. At the bottom of the pyramid, you will find the so-called negative exclusion. This strategy aims at substantially banning, so exclude from an investable universe of an institutional investor or an asset manager those companies based on ESG criteria, especially based on ESG poor practices or controversies that we are able to analyze and to identify. This is a pure exclusion approach. The second step could be considered active selection. Active selection is something more integrated, because through active selection, we select the best investment opportunity using as input not only the financial, but also the ESG feature of the company itself. The third one is more about impact investing, all that activity that can have a specific societal impact and which is measurable. One common practice or strategy to all this layer is the active ownership then. Namely, we can call it voting and engaging, the dialogue with the company, basically, because we really consider that with the active ownership, we can push our investee company for integrating better ESG practices into their business. Having presented, a little bit what ESG SRI means, now I can explain from our standpoint, Generali Group, which are our beliefs in terms of integrating ESG into our decision-making. We are managing approximately 500 billion euro, which is a big amount of money. And we are investing mainly in Europe, but sometimes also worldwide. And we really believe that through responsible investment, we can achieve some very important targets. First of all, we can provide added value for our stakeholder. When I say stakeholder, I'm not referring only to our shareholders. I'm referring to our clients and our employees as well, for instance. And as a result, also to the society as a whole. We firmly believe that through responsible investment, we can reinforce our risk management framework, especially on those kind of risks that are called non-financial risks, that can have an indirect impact also on our financials, just to mention the reputational risk, but not only if we move fast to the, for instance, climate risk topic. Third, responsible investment practice could be seen as a real effective way through which we can push our investee company through the dialogue, through the engagement, and also to the voting, to adopt and to promote better ESG practices in their businesses. These are the key beliefs of Generali Group today, and this is basically the key driver for all the implementation we have done and we are going to do in the next future. On this table, simply we represent some of the main initiatives on sustainability that Generali supported since 2017 by signing very important, pledge, commitment, and agreement. Some of them are, already have been mentioned by the speaker before me. You have all the reference here if you want to, go a little bit more in depth on each of them. Just need to mention that, since 2014, the main commitment pledge we have decided to adhere are mainly on the climate risk topic. And so the group now is really committed to support all these initiatives by internal project aiming at, supporting the transition toward a more green economy, both in terms of investment, but also to avoid to contribute to the CO2 emission with our businesses, both insurance and asset and investment management as well. Coming more specifically to our framework. In this slide, I try to sum up which are the key pillars of our framework for integrating ESG and SRI at Generali Investment. Exclusion. As I already mentioned, toward exclusion, we want to avoid to invest in any issuer that present poor ESG practices not meeting our Generali ethical principle. Selection. We select an investing company which show the best effort in implementing good ESG practices. Impact investing. Our chairman before explained all the initiative we are starting with the human safety net, which is Generali Foundation. We are still at the beginning, but we want to move fast also on this initiative. And the fourth pillar is about active ownership. When we say active ownership, we want to encourage our invested company in improving their ESG practices, and how we do it by voting and engaging them and with the dialogue. Exclusion. In this slide, I try to summarize our approach for excluding companies that present very poor ESG practices, also sometimes, resulting in controversies and legal procedures as well sometimes. But basically, in terms of criteria, our internal policies provide for two kinds of different exclusion approach. Sector exclusion, we want to exclude companies belonging to certain controversial sectors. For instance, the weapons sectors, companies that, for instance, build or are in the value chain of the business for producing nuclear, cluster bomb, non-conventional, chemical, biological. We want to exclude this company. And recently we have also introduced in our sector exclusion policy those companies that are correlated. This is part of our broader climate change strategy. Then we exclude also companies for other ESG controversies, more related to severe environmental damages, human rights violation, and corruption. This is the job that our analysts, ESG analysts, normally do a couple of times per year. And then our group chief investment officer is the one that will decide finally what to do in terms of which company to exclude or not. And doing this is supported by an internal committee we call Group Committee for Responsible Investment. It's a cross-function committee where you can see investment, finance, risk management, and sustainability took part to support and advise our chief investment officer. Which is the outcome? But basically, the outcome is two lists. The one is the restricted list, where we listed the company we have decided to ban from our investor universe. And for those companies, the action is we do not carry out any new investment, and in case we are exposed to this company, typically the action is for the fixed income, we hold to maturity, or we can evaluate opportunistic sale. For the equity, typically we sell. The second list is about watch list, because, you know, in the watch list, we want to put some issues that present, you know, higher risk, ESG risk for the company, but not so serious to exclude them from our investable universe. We prefer basically to have a strict monitoring on them and possibly to engage them in order to better explain and to know and to understand exactly which the situation is. This is our framework for exclusion. Our framework for selection is something different, because here we don't want simply to exclude the companies with poor ESG practice, but we want to select on a best effort approach those companies that present, you know, clear effort and investment for integrating ESG into their business model. Basically here in a nutshell, our approach is about to identify kind of 34 ESG criteria for each relevant sector, and for each of them we analyze the company in our investable universe, trying to identify both the ESG risk but also the ESG opportunity. At the end of this process, we will have a rating for each issuer, and all that issuer that will present a rating higher than the average rating of each specific sector, this issuer will be included in our investable universe. The other issuer will be excluded. The active ownership at Generali Group. As I said, active ownership for us means basically voting and engaging. You know, voting, we manage a big portfolio of equity investment, and through voting, basically, we want to encourage our invested company. Obviously, if we have enough levers to do it, we want to encourage them to implement good ESG behavior in their business. For doing this, Generali has adopted since many years ago and is updating constantly a specific voting guideline where we define basically which are the key criteria and requirements for each relevant resolution submitted in each single aspect of the ESG, environmental, social, and governance. Just want to say that this is a very tough activity, because if you look at the number of the last season, basically Generali took part to more than 1,000 meetings in 32 different countries, mostly in Europe, but also in other countries such as America and Asia. And we analyze something, 1,500,000 resolution. Okay, so very, very, very tough job, because sometimes to analyze environmental, social, and governance under different countries and regions is something very difficult, also due to some local differences. The other way we use for exercise of our active ownership is engaging, which means we meet the company and we dialogue with them on several topics and with several objectives. Some example, when we are talking about exclusion, typically we engage company because we want to know more about the allegation and the controversies, and we want to ask them which kind of action plan and remediation they are taking place, because we want to know if we can consider them still included in our investable universe or we have to exclude. When we are talking about selection, the dialogue is a constant dialogue, because here we want to discuss with our company not only the ESG risk they have, but also the opportunity and their plan for developing. And for voting as well, because sometimes we want to engage company before attending the AGM, because we want to push for certain direction, for certain resolution. Our chairman before mentioned the climate change strategy. I put here because it's kind of transversal, topic, but it's worth to mention it because it was a very big step that our group took only 1 year ago. The climate change strategy is a broader strategy rather than pure investment, but in terms of investment, obviously the group want to support the transition to a more sustainable economy. And so the board gave us 3 basic KPIs for this. One is positive because the board accepted to, improve our, green and sustainable investment by 3.5 billion by 2020. And now we are just reviewing this target because we would like to do more for the next year. Then there is a kind of exclusion policy, as I explained. The board, accepted to basically phase out the coal sector business because now, we cannot invest anymore in what we consider coal-related company. And for all that concern our current exposure, basically the 2 billion fixed income and very small portion of equity, we are fully committed to run off the fixed income position, to sell the equity, and possibly also to have some opportunistic sale in the fixed income space. The third KPI we received is about, as Mr. Galateri mentioned, engaged country, where generally have a little exposure, but which represent a problem in terms of, impact on the society if we decided to go out completely by the coal business. So here our approach is more to open a dialogue with the company, but also with the local institution and the government, because we want really to know which kind of steps they are taking for transition toward a more green economy, or at least which kind of action they are putting in place to safeguard the health of the citizens. This slide is the last one. It's useful for you maybe to understand now the methodology we apply on a investment portfolio perspective. Because, as an insurance company, typically in investment, we used to see at our portfolio grouped in two big families. The general account investments, are those investments we consider at own and share risk. Means all those investments that are mainly for covering technical provision for the P&C business and the traditional life business. For those of you who are Italian, the gestioni separate allow the company to share investment result with the policyholder. For all these aggregate of investment, accounting roughly 345 billion, we apply the exclusion-only policy. Here we are saying that we are monitoring above 5,000 companies worldwide. We also apply selection approach for 36.8 billion on a investable universe of roughly 500 companies, and this is specifically the portfolio of our life insurance company in France. Because as I explained before, France is a leading practice in Europe, and our company in that country asked us to apply a more strict, a more proactive integration on their general account investment for the life business. Third-party risk is the other big family of our investment. Here we are talking about mutual funds and unit-linked, all those investment or investment-linked product with an insurance wrapper, where the financial risk, the investment risk, is contractually transferred to the client, which is the number and which is the methodology generally applied to this aggregation. But basically today our offering of exclusion and selection approach is not so big, because our investment here are about 325 million, mainly represented by two SRI label equity funds, namely the SRI European Equity, SRI Aging Population, which is inter alia a thematic fund. So relatively small portion of our portfolio, but I guess I'm not saying nothing that has been already disclosed. Generally, is in the process for closing a very important deal, which is the acquisition of the majority of Sycomore Asset Manager. Sycomore Asset Management is one of the leading players in ESG SRI space in the French market within a European space. This will allow us not only to improve quite quickly our portion of asset under management fully ESG integrated up to 8 billion, but obviously will bring to our group new knowledge for developing more our competences. This is clearly another very important sign of the commitment of Generali toward this activity. Last slide for me is to discuss with you and to explain to you which are our challenges for the next future at Generali. Maybe I don't want to spend much word on what there are considered regulatory development because of the speaker before me already introduced them. Just want to focus on a couple of them, which are particularly important for our group, both in terms of, investment operation, but also in terms of, approach. We want to improve our ESG integration in those kind of asset classes that can be considered not traditional one, namely the private equity, the private debt, and the real estate as well. Because those kind of asset classes and investment are really peculiar, typically are long-term investment, and the ESG integration in that kind of asset classes is something that should be, tailored very well for each of them. Another is more, cultural, because what we see is that we need absolutely to improve the cultural integration of ESG into our company, starting from the top. And in this respect, we are lucky because Mr. Galateri always supports our initiative and promotes a really effective dialogue with the board and the committee. But, the culture on sustainability is something that should be really improved in general, but I would say also in Italian market as well. Last but not least, I have to say that all these challenges are big projects that require time, require effort and investment. Just to be clear, each of them have an impact on our organization, processes, tools, etc. We are lucky because in Generali today there is big attention on the sustainability topic, so the top management is really supportive, but we do not have to underestimate all the effort we have in front of us. Effort, but also satisfaction. Why? And here, I come to my last key number, which is 22 February 2018. I want to share with you this small history. This was the day after the board approved the climate change strategy. And there was a big communication impact on the media. Every Italian newspaper, but also international one, wrote about this big decision from Generali, this big step toward a more sustainable business model. Well, having worked on this project with Lucia and with many other colleagues here in Generali, I decided to buy a couple of newspapers and bring them at home just to show to my family the result of such many efforts. It was particularly nice with my son Lorenzo. He's 13 years old, and unfortunately he's quite informed about the climate change topic impact and the needs for a transition toward a more sustainable and green economy, because at school they started talking about this topic. So I had this long discussion with my son, but finally it surprised me because we finished our discussion and he simply told me, "Oh, well, Daddy, now I understand you've done something really important for me, for my friends, for our future, for a better world. But let me say, I've never been so proud of my job, of my colleague and my company."
Thank you, Francesco. We are running a little bit late, so I ask Mauro to recover a little bit in a sustainable way. And I leave the floor to Mauro. Thank you.
Thank you, Massimo. Good morning, ladies and gentlemen. My name is Mauro Panebianco. I'm a partner of PwC Italy. I'm leading the asset and wealth management practice in the consulting services in Italy, not in the world. And don't worry, I will cut my presentation because you are very tired. We are before the lunch, so I will try to be very, very short. I've made two mistakes. One is to prepare my presentation in Italian. I didn't understand that the audience was multicultural. This is my mistake in ESG environmental, so sorry for this. But I will try to speak in English, so my presentation will be in English. The second mistake is I didn't read the email of Massimo. So Massimo has asked me to prepare 3 numbers. And so Massimo phoned me yesterday and said, you have prepared 3 numbers? No, my God, I didn't prepare. So I will try to think last night about 3 numbers. And my thought was very not original. 3 numbers means 190 and 90, that is my height. The second is 85, that is my weight, maybe 1 kilo more after last night. And 49, that is my age. But after other thoughts, I would like to show different numbers that are 236,000, that is the number of employees of PwC in the world. The second is 158, that is the countries where PwC is present. And the third number is 738, that is the number of the offices of PwC in the world. It means that PwC has to deal every day with ESG because this is a very complex environmental, and PwC has a difficult chance to discuss with different people, different cultures, different problems. These are impressive numbers, but I'm confident that you agree that we are in front of a quantum leap in the process of investment decision. It means that also in asset management arena, there are numbers that people has to observe before to take decision. Where is it? Okay. If you go, I will try it. The technology is not my... Where is the...
Qual è il...
Qual è?
Quello sotto.
Okay. So, indeed, the interest in the sustainable investment solution is rising in the world, in Europe, but also in Italy. However, even if on the one hand there is a greater sensitivity towards environmental and social issues, on the other hand, there is still lack of a solid knowledge. It means there is a little bit confusion because, as Mr. Bicciati said, one goal of the finance sustainability is to find a unique taxonomy. It means that we observe different acronyms, ESG, SRI, and impact investing, and these terms often are used interchangeably with the assumption that all correspond to the same meaning and approach. This is not the truth. ESG, standing for environmental, social, and governance, contains 3 distinct universes of social sensitivity that have a significant impact on the investment performance. The main objective of the ESG assessment remains the financial performance. SRI, standing for socially responsible investment, actively removes or select investment based on specific ethical guidelines. The main objectives is to generate profit without violating social consent. It means that there are different objectives, and the universe of the investment changes between different strategy. As Francesco told before, Generali investment is one of the main players where ESG is on the top of the agenda. But I put these different news from the newspaper. We can see that other major players look for ESG criteria to take decision on investment. For example, BlackRock, Schroders, Fidelity, and there are also many players. I read this morning on the newspaper that also Bank of America, Merrill Lynch, has tried to define a strategy for ESG. In recent years, there has been a steady growth of SRI market with a continuous increase in asset under management, and the number of products are increasing a lot. I discussed I think 5 years ago with an important CEO of an asset management in Italy, and I tried to discuss with him why they didn't define an ESG strategy, why they didn't decide to set up ESG products. And he told me, this is not profitable. This is a very niche market, and the only people that I could sell this product are institutional. This is not true. And we observe now that also retail market is interested in this kind of products. Therefore, asset managers are moving away from the perception that ESG is at expenses to financial performance. As such, they acknowledge the importance to integrate ESG risk in investment decision. ESG is an added value. ESG is gaining momentum across the world. Drivers are investor demand and alignment with the values. I show now the numbers. There is a continuing growth of funds with a sustainable investment approach. These are figures of 2016. We are waiting the new figures, but the number of retail funds was equal to 113, and the assets under management are equal to 24 billion euro. There is a recent survey of Monde Investor that showed that the number of ESG funds reached 237, and the asset under management is equal to 71.9 billion euro. You can observe that there is a huge increase of this product and asset management. And also, we observe a shift of the SRI sector from the niche market of institutional investors to the investment in retail portfolios. The numbers confirm a sustained growth of the asset under manager over time. Start of rationalization and consolidation funds with a decrease in the number in Europe in mid-2016. Correlation between positive performance and solid ESG criteria is a story. It means that if we observe the performance, the ESG products are less volatile than the other products. However, the survey of Monde Investor showed that the high volatility that characterized the first quarter of 2018 also caused a negative returns for SRI funds. On recent study performed by Schroders, conducted in April 2018 over more than 22,000 people, invested from 30 countries around the world, showed that 57% of respondents believe that there is a low level of knowledge and of financial education with respect of SRI. 76% of respondents, however, believe that sustainable investment have become much more important in the last 5 years. 64% of respondents have increased their allocation to sustainable investment in the last 5 years. It means that also we live in a generation where millennials will be the future investor, and millennials are more interested in ESG criteria. As already stated before, SRI systematically integrate ESG criteria in the evaluation of companies in order to select those that have obtained the best rating. ESG criteria are environmental, social, and governance. Environmental state for climate change, greenhouse gas emission, exhaustion of natural resources, waste and pollution, deforestation. Social, such as working conditions, local communities, health and safety, relationship, diversity of employees. Governance means executive remuneration, office abuse and corruption, lobby and political donations, diversity, and structure of the board. These are the 3 elements that who take decision in investment process has to be considered. But there are also different strategies. Before, Mr. Bicciati said that Eurosif has set up 7 types of different strategy in the investment. One is exclusions, the second is norm-based screening, the third is engagement and voting, the fourth is best in class, the fifth is sustainability themed investment, the sixth is impact investment, and the last one is ESG integration. Let's look very quickly, one by one. Exclusion. Exclusion approach covers both countries and companies and limits potential reputational risk by excluding sovereign issuers, companies or sectors that do not meet ESG criteria, or whose profits are generated by products that do not meet sustainable standards. For example, companies that violate the following are not included in the investment strategy: violation of human rights, recourse to child labor, violation of labor rights, falsification, and etc. Countries that violate the following are not included also in the investment strategy: violation of press freedom, discrimination, not cooperation in anti-money laundering. The second strategy is the norm-based screening, and the companies that meet the ESG criteria are sought by adhering to global rules on environmental protection, respect for human rights, labor, and anti-corruption. Then we have the engagement and voting approach that implements a strong link between the fiduciary duty and the objective of loyalty towards the value of sustainable growth and prudence in the adjustment of risk. For example, and Francesco told before, the stewardship and engagement, such a regular meeting with management and not only with the executive director. Then we have best-in-class and sustainability theme. Best-in-class means investors have the opportunity to have in their portfolio company with the best ESG score, and sustainability theme means strategies that include various topics, such as reduction in use of fossil energy, green economy, and water management. Let's look at the impact investing. The impact investing strategy aims to achieve an economic return by actively placing financial resources in projects, companies and investment funds that bring tangible benefits and solution to social and environmental issues by promoting local development, for example, by creating jobs and improving the quality of life of people. And the last is ESG integration. This ESG integration strategy provides the explicit inclusion by the asset manager of the risk and opportunities arising from ESG factors within traditional financial analysis and investment decision through systematic processes and appropriate research sources. These are the main investment strategies. These are what we are discussing with our clients. In Italy, we are a lot of companies that are addressing this problem. PwC now is trying to certify the process investment of many players to be aligned with ESG criteria. I think I can conclude my presentation because the other part is about regulation, but before my colleagues have spoken about this topic before.
Thank you very much,
Thank
Mauro.
you.
Thank you.